am Ben Reppond. Welcome to my YouTube broadcast. Today is August 6, 2025. Okay, I'm going to begin with the dashboards. We'll cover this. I'll give you the preamble, and that is that the market last week was negative. Generally speaking, most indexes and stocks were negative. So I'll cover that and I'll get into the detail. You can see on this chart, in the center is a yellow box. This is what happened to the 7 indexes that I'm tracking. 6 are equities, 4 U.S., 2 international, and emerging and developed markets, and then the bond, long-term government bond. And then in the red box are the year-to-date numbers for those same indexes. To the far right, you'll see that how they are doing relative to their moving average, 20 period, 50, 100, and 200-day moving average. Everything was negative, quite a bit negative. The most negative was the Russell 2000 small cap index, and then next to that was developed markets, and they were all down 2 to 3%. Year to date, and by the way, and then long-term government bonds were positive. And then year to date, the numbers are all positive except for the Russell 2000 small cap index, and it's negative. So of those that were above their moving averages, there were 18 that were above 18. The number of indexes and the number of moving averages. And the previous week there were 26. Excuse me. I'm sorry. 18 were positive. 26 were, the previous week were positive. Okay. This is an interesting chart because it shows the 11 sectors, major sectors, industry sectors, and usually there's something positive. It wasn't a terrible week. It was negative, but it wasn't cataclysmic. But when you look at this across the sectors, it's pretty negative. The most negative were basic materials, and they were down 6%. Retail was down 4%. Everything else is down from 1 to 3%. That's a lot for a week. To the right of that is the red box, and that shows that there are 7 of the 11 were positive year to date, and 3 are negative. The most negative are retail, consumer discretionary, and healthcare. And 18 out of the 44 were positive, which is down. The previous week it was 36. And so you see all of that negativity in the last week, but then look at this chart. This is the S&P 500 for a 3-year period of time. So when you look at this, you see at the very far right, the upper right, it goes down a little bit, but look at the negativity on the previous chart. Wow, it was a lot of negative with not a lot of movement down. But anyway, that's what the broad market is looking like. Generally, I put a black arrow to show that in that 3-year period of time, it has generally moved in an upward direction. When I put the same chart on a candlestick basis, you'll see the red, and this is good to do it on candlestick because you can see that red drop down at the upper right. That's last week. And there are plenty of red ones and plenty of hollow ones that show an upward movement. But yeah, it was a negative week. But here we are. I'm recording this on Monday the 4th, and just for Monday, just one day, the market is up nicely today, and but it rebounded from that negative weekend, particularly the negative Friday. Okay, this is when we put this on a daily chart. This is interesting because you'll see at the very far right, you will see the move down. These are days. So the last 2 days for this year, the last 2 days to the far right, Thursday and Friday of last week, pretty big negative move down. So that's different than when you looked at the weekly chart. And this is just for the year of 2025. So over all of this period of time, it's gone up a little bit, down a lot, up a lot, and now it's made a move down, going below its 20-day moving average. So anyway, that's where we are. On the NASDAQ 100 compared to the S&P 500, relative strength, if it goes up, that favors the NASDAQ 100. If it goes down, it favors the S&P 500. A 3-year chart, generally you can see over that period of time, it has mostly gone up more than down, but it has done some of both. And I put an arrow at the end of it to show during the last few months that it has moved again in an upward direction, favoring the NASDAQ 100, which is, or the growth stocks, tech stocks, Mag 7, etc. Somewhat similar but different is another 3-year chart showing, it's a weekly chart showing the growth component of the S&P 500 compared to the value component, SPY-G versus SPY-V, and you on a relative strength basis. Clearly it goes up, but at the very end it goes up even more. It hits an all-time high at the end. So showing the strength of growth, and you could even say tech and Mag 7 are somewhat driving that. So the rest of the market, probably quite a bit of the stocks, I don't have a number, but quite a bit of the stocks are probably struggling because the tech and Mag 7 in particular are holding those, probably holding those up. S&P 500 compared to the large companies, the 500 largest companies, compared to the 2,000 smallest companies, the Russell 2000 Small Cap Index. When it goes up, it favors the large cap. When it goes down, it favors small cap. Mostly, black line arrow shows that it favors the large cap companies. And at the very end, the very far right, upper right, you can see the very significant move up in the last couple of weeks, showing a definite favoring of large cap over small cap. Long-term government bonds, the long-term direction, this is 5.5 years. Long-term direction is down, but at the very end, you see the little move up where it actually crossed the 20-period moving average, and it is positive. And you saw that in the earlier data that I showed you. The dollar has in the past, this year, so from about January 1 to present, you can see that last segment at the end of the right end of the chart, the dollar had been going up and now it came down. Recently, in the past 2 or 3 weeks, you can see that it has begun to move back up. And so is that going to be a new trend that it will strengthen and go up? I don't know, but that is positive for the dollar. What that means is that for foreign countries or foreign currency is that if they are buying things in the U.S., they will pay more for them. It's not as good a value when the strong dollar. And for U.S. people who are buying or buying services or goods in foreign countries using the U.S. dollar, it goes further with a strong dollar. Gold has it's been going up a lot, but during the last couple of weeks, you can see at the very end it has kind of flattened out a little bit there. Silver has come down again. It's been going up mostly, but came down in the last week, and that's illustrated by the move down at the very far upper right. Bitcoin has come down a little bit, just a little bit, mostly, but overall for this three-year period of time, mostly been moving in an upward direction and still is above its 20-period moving average. Volatility, when you look at the the early charts, the first two charts, the U.S. equity indexes, the sectors, remember everything was so negative that the market had gone down just about everywhere. What that causes is it causes the volatility index to go up. No surprise to the very far right. I put an arrow to show that. It's still 20.38, which is below my arbitrary number of 24. So it's not in dangerous territory. But today, if the market continues to go up, this should turn around and come back down. So the S&P 500 compared to South Korea, the SPY versus EWY, which is the ETF illustrating the Korean market. When it goes up, this favors the U.S. stock market versus, in this case, South Korea. I use this because it's a good chart, and it gives an indication of strength in foreign markets, in this case South Korea, or strength in the U.S. market. So a lot of times here it was favoring the U.S., but since the beginning of the year, most of the time it's been moving in a downward direction, which favored South Korea. Gold and silver. As of August 1, last Friday, the price of gold was $3,365 per ounce. That's an ounce of pure gold, gold bullion, down 1% from the previous Friday. Silver, $36.98, down 3.2% from the previous Friday. The gold-silver ratio is 91:1. A monster box of silver bullion, approximately pure silver, I think it's 0.999% pure silver, is $18,660. This includes a 34-cent per ounce markup over spot, bringing the total to $37.32 per round, including the markup. And that is courtesy of my son Preston, who is in the precious metal business. And he keeps his prices very competitive, very low, and so this will not be representative of all retailers, but it is a good benchmark because he's so competitive. Okay, if you have questions or comments, leave them in the comments section below. Thank you for watching.